Hello, this is Wonagi. The indicator I will be demonstrating today is the RSI Close Chart Wonagi indicator, which I am making freely available to all of you. You can use this script without cost, and it's an indicator where the open source code is openly provided for public access. Therefore, instead of just saying simply use it, you have the distinct advantage of being able to directly open, modify, and customize it to perfectly suit your own unique trading style, making it incredibly versatile. So, in today's video, I'm going to simply explain what this indicator shows, how you should interpret it, and the reasons why I decided to construct the RSI in this particular manner. Most of you are probably already quite familiar with the standard RSI indicator. However, when you actually apply the RSI to a chart, you'll often find it more inconvenient than anticipated. There are times when it moves too quickly with excessive noise, making it quite ambiguous and hard to discern. Sometimes it's hard to see at a glance what's really happening in a certain section. Thus, I felt it was necessary to have a format that was more fluid and intuitive, one that could be interpreted visually with greater ease and speed rather than simply observing the RSI as a singular line. And that leads us to the indicator I'm presenting to you today. This particular indicator can be seen as a chart that organizes the RSI to make it easier to read. The core of this indicator is very simple. First we have is the RSI 7. The second one is the RSI 21. This setting is for 7 and 21. The RSI 7 indicator responds and moves more quickly. It quickly highlights the power of short-term momentum. Conversely, the RSI 21, being slower, lags considerably. So it reveals the broader trend, indicating a more stable and reliable direction. However, the crucial point here is that we aren't simply utilizing the RSI in its raw, unfiltered form. In this indicator, I have smoothed both RSIs to make their movements more fluid and less erratic. In the code, I've implemented a dual EMA method to ensure the data is processed smoothly. So, I've refined a fast line and a slow line to make them more visually appealing, creating a structure where you can easily compare them both on a single screen. Now, I will explain what you should actually be looking at on the screen in practical terms. Firstly, this indicator includes baselines 70, 60, 50, 40, and 30 precisely. These are the main baselines. You'll commonly see the numbers 70, 30, and 50 on a standard RSI indicator. Above 70 is largely seen as an overbought zone and below 30 as an oversold zone. And 50, that indicates the direction, the particular trajectory this chart is currently following. However, I've gone a step further and divided it into additional levels. It's precisely 60 and 40. This is where the most significant power. Really powerful. At 60 and 40, it exerts incredible force. 50 is the very center, and to put it simply, 60. It can be used as a standard for assessing the market sentiment, determining if buying pressure is dominant above 50 or if selling pressure is prevalent below that line. Alright, allow me to explain exactly why I've included the 60 and 40 levels. When this chart is in a sideways movement, meaning the candlesticks are moving sideways, the RSI 7 line converges with the 60 and 40 lines. And the 21-day line intersects. Yes, both the 21-day line and the RSI 7. If the RSI 7 and 21 cross frequently around the 60 and 40 levels, we can say that this indicates a sideways movement. During sideways movements, if the RSI 7 rises above 60, it indicates an overheated market. Conversely, when it reaches 40, it typically finds support and begins to ascend. This chart really highlights the significance of the RSI 7. The relative strength index itself. When the RSI 7 indicator is in a sideways movement, it typically fluctuates between the 60 and 40 levels. But when the RSI indicator shows a clear trend, it will shoot up immediately from the lower levels, especially if a golden cross forms, signifying a strong upward momentum. That signals the authentic commencement of an uptrend. If a bearish dead cross appears, it would clearly signify the serious and definitive beginning of a downtrend, marking a critical turning point in the market. That's exactly this RSI indicator. If you look at this indicator, you'll see it's not just lines. The background area is also colored. Above 70, between 60 and 70, between 30 and 40, and below 30, there are subtly colored areas. The clear purpose of these three distinct zones is to enable your brain to immediately grasp your current position on the chart the moment you activate it. This quick recognition is crucial for efficient analysis. For instance, if it's above 70, you might perceive it as a strong zone and thus exercise caution with buying. Conversely, if it's in a suppressed zone, you might consider a potential rebound. That pivotal 30 zone is precisely where these thoughts occur. Let's take a look at the Bitcoin chart. On the Bitcoin chart, under the RSI indicators, if you search for RSI closed chart in the script section of the indicator list, the indicator created by Wonagi will appear. This very indicator is exactly what safeguards your profits, as you can see. For more stability, staying between 40 and 60. Then you would most likely perceive that particular period as a phase of sideways movement. The real uptrend genuinely happens when the RSI 21 moves past 60 or drops below 40 and the optimal entry point. The entry points for buying and selling are determined by when the RSI creates a cross. If a cross occurs below the 40 level, it can be interpreted as the beginning of an uptrend. Conversely, if a cross happens above the 60 level, it indicates the start of a downtrend. And when the RSI 7 deviates from the oversold or overbought territory, it very rapidly indicates the peak and trough points, showing the highs and lows. This indicator includes a feature that fills the space between the two lines. It uses color to show the gap between the RSI 7 and RSI 20. It consistently indicates that when the fast line is positioned above, buying pressure is strong, and conversely, when the slow line is below, selling pressure predominates. In practical trading, please do not overcomplicate things too much. You can look at this indicator in 4 main steps. First, where is the RSI 7 currently? Second, where is the RSI 21 right now? Third, what's the up-down relationship between the two lines? Fourth, is the current position nearer to 70, 50, or 30? For instance, RSI 7 is above 70, RSI 21 is above it, and both are above 50. It's smoothly ascending. In that situation, you can reasonably conclude the upward momentum currently holds considerable strength. If the RSI 7 is below the RSI 21, RSI, if the 21 drops below 50, then it suggests a shift. Then you can consider that the market has now entered into a significant downtrend phase. Just by looking at this one indicator, you can tell the strength of an uptrend or a downtrend and the current market condition. When a golden or dead cross appears between the 60 and 40 zones, it signifies a sideways movement, allowing you to clearly distinguish all directions. It clearly demonstrates whether the market's underlying strength is clean or messy. I really think this RSI indicator, the Wonagi RSI Cross indicator, will prove to be incredibly useful for all of you. This script has been made publicly available for free and its open source code has also been released openly. This holds considerable significance. That's because many people just download and use this indicator without really engaging with it. To truly improve your skills, though, you need to break it down and understand the process step by step. Being open source means more than simply being free. It signifies the ability to study it, modify it, and evolve it to perfectly suit your personal trading style. Especially for those dedicated to studying PineScript, I genuinely believe this structure will provide excellent practice material. So, to sum up, this indicator combines the RSI 7 and RSI 21 to clearly show both short-term speed and the overall trend. This indicator clearly shows whether the current chart is in a downtrend, an uptrend, or a sideways movement. I have also incorporated smoothing to make it appear much softer, cleaner, and ultimately more intuitive to interpret. Furthermore, the baselines at 70, 60, 50, 40, and 30, along with the colored sections and the filling feature between the lines, enable you to swiftly understand the current position and the relationship of forces with just a glance. If you found this video helpful, please like and subscribe, and I hope to see you. I look forward to seeing you all again in the next video. Thank you for watching.